All right, so speaking of negotiation, yes, we want to bring the discussion up a notch and really, kind of dive deeper into the technicalities of the investment process. So, I think we're done with the easy part of the discussion. Now we're going to go a little bit more into somehow the controversial side of it. And I will start with the good news and the bad news. I think the good news is that we spent the whole day yesterday, the whole morning, I would say, kind of discussing and sharing data about the potential issues of startups today and the potential bubble. So we love the fact that European is bubbling up with all these thousands, and we're lost count, of startups that are getting created every given day. And so we're actually part of that fueling of the market. So I think it's all good there. But we're also pretty worried about the potential burst of that bubble, specifically in Europe. Because we see that, and data showed yesterday, I'm going to give it, in a very short note, but we see that today, it looks like, especially in Europe, startups are living in a vacuum. We want to see more and more events like this, where typically there are events where corporates talk and then where startups talk. And these two worlds are still too far apart in Europe, especially as opposed to places like Silicon Valley, where I happen to be living in the last dozen years. So that's kind of the challenge that we see. And so we show data about this potential issue of just, bubbling up accelerators locally if they are not really connected to the market. And so eventually, we put the core of the discussion into really the role that you guys play here. So, the fact that you are the bridge from the early stage startups to the real market. You are the potential exit strategy for a startup. You are the potential, counterpart with whom a startup can grow, right? So not to put you on a spot, but you have a huge responsibility today, okay? So, we appreciate what you're doing. I think you should have 1,000 more of yous here. And so I think that's a good news, that you're playing really a very significant role in the potential of a startups in Europe. Now, on the potential bad news is that, this is a process that is still, I think, not well defined yet, right? So the whole idea of integrating these two worlds, we're all trying, different terms, we're all trying different discussion, we're all trying different investment scenarios. I think the kind of a velocity with whom these operations happen, for example, in Silicon Valley, are still far, miles away. Okay, so I want to bring the discussion more on the second side. Again, we're a group of friends, so do not worry about sharing also things that didn't work that well. Right? So the way that I would like to start the discussion, I think you guys already alluded, you represent corporates that somehow also presented before. But I want to go a little bit more into some of the technicalities of the funds. You pretty much all represent corporate venture capital funds. So why don't we start with just a quick, literally 2 minutes recap of your corporate venture capital, but especially with the main topic that is, why do you do it? Do you do it to look for financial returns, or you do it because this is strategic at the corporate level? So let's start from that, just to recap what is the initiative on the venture capital side or acquisition side, and why you do it. So how you measure your activities. Maybe we should start from this side.
Thank you. So a few words on my background, because my background is matched with this project, Enel project, because we are pretty new in doing this. And this because my background is 15 years in telecommunications, so I know and I passed the years in which internet and other things disrupted the sector. So one important point that this is happening now in energy, and innovation is disrupting energy. So our first steps here in the energy sector is because not to make the same mistakes we made years ago in telecommunication, because at the time we were more centrically in this market, saying no one can come here and put us away. It was a mistake, and now we are trying not to do this mistake in other sectors that is affecting on technology, new innovation and technology. So having said that, we decided, after having halved our generation market in Italy and Spain as margins in 3 years, so really a turmoil, to try to do several things. So you heard Carlo Papa working in a division. Every division of Enel is doing this. And now at the corporate level, we have this program that is Enel Lab, where we want to look at the smartest startups in the clean tech sector. This program is financed through 15 million euros in 3 years, and then we will renew the program. Now we are adding other 8 million euros from European funds. So we have roughly 20 million euros to finance our startups. Our approach is strategic. We have not a financial approach. So we want really to establish an industrial partnership with our startups. And I think now we have a first check, so we have details on our program. I think we have time to explain.
All right, Luca, Telecom Italia just started a new fund. So tell us a little bit more about what are the metrics, meaning that what you expect is that a financial or strategic return?
Thank you very much for this opportunity. First of all, I will say that I do believe that strategic versus financial is not either or proposition, in my opinion. I consider that I'm personally have been working 14 years in finance, and 13 of which in Telecom Italia, also covering M&A and extraordinary transaction. So trying to summarize our approach, I would say it's a strategic one with financial discipline. Telecom Italia has launched the corporate investment program at the beginning of 2014 to invest 4.5 million euros in minority stake of the most promising startups. Sectors, let's say, targeted sectors are ICT, digital, and green. Typical investment size ranging from 100K to 500K. As Telecom Italia has been the first corporate in Italy to have launched a program supporting startups in 2009, I'm also proud to say that Telecom Italia has been the first corporate to launch a dedicated corporate investment program in Italy. And I would say it's the right time to invest in Italy. We have the most advanced regulation, and probably I would say the right condition to do that. And let's say it's only to make, and to make it now.
Okay. How big is the fund going to be?
Sorry?
How big? What's the size of the fund?
4.5 million euros over the next 3 years. And so starting from this year, so consider the average ticket, which is the one I have already described, in the range of 100K to 500K.
Good. Thank you.
Euros.
Clara, you also have a company, an entity in Silicon Valley. It's actually not too far from where we are. So tell us a little bit more about the fund, the size, and is that a financial? Your metric are more financial or more strategic within the bank?
So first of all, I'd like to say that in BBVA, we believe that the venture capital model is the best way to innovate in a large company, because probably it's the most effective way to access to emerging trends, disruptive business models occurring with the startups and small companies that in fact know how to innovate better than us, because they have the proper processes and the incentives we're missing. So our experience shows that an investment normally is a natural next step when there is a mutual benefit between the company and BBVA. So in that sense, as a corporate venture capital, and here let me highlight the keyword corporate. What's more important for us is this financial fit, this between the disrupting business model of the startup and our core businesses, which is even more important than the financial exit. Right. The problem is that normally this strategic fit takes time to build because it's based on trust, managing mutual expectations, and also these potential partners had to be screened and chosen based on their ability to also benefit a partner like BBVA. What more? From my perspective, probably, investing in a company is basically an exchange of knowledge between the company and BBVA, right? Our portfolio of companies. Because on one hand, this relationship enables BBVA to access to these emerging trends occurring in the financial industry. But at the same time, on the other hand, the entrepreneurs can also access to BBVA resources. Our presence in over 30 countries, our global distribution networks, our business experiences across international markets. So at the end, I can summarize saying that the venture capital model it needs to be a win-win relationship where the startup wins, obviously, BBVA wins, and in general, the customer wins. Right. So,
remind us, how big is the fund?
The size of the fund is $100 million for building a portfolio of 20-30 companies. Obviously, that has some implication on the size of check to write, because our investment criteria is closing investment from $1 to $5 million for a minority equity stake. But anyway, to be honest, we always want to invest enough to secure relevance and make sure there is a strategic value that both of us respect. Right.
Jacky, Orange.
Yes. So first of all, I think I will agree with Luca regarding there's no like one right model or the other one. So in our experience in Orange, when we've been in the venture capital business for more than 20 years. So the first initiative started with a VC called Innovacom, where Orange put some money, and basically at that time, what we were looking was really for financial and industrial return. So basically, the investment that this fund was making were relevant to Orange as being one of the main sponsors. And then along the way, we realized that well, you know, because of the pressure, the financial pressure, so then the investment were less relevant to Orange and more looking only for financial. So we decided to say, well, now we should create our corporate fund. So a few years ago, 5 years ago, so we created Orange Capital with the aim to invest primarily in companies having some synergies with the operator. But of course, we always look at the numbers. And that activity, so as I said, was launched 5 years ago. We started in Asia, then we expanded to the US, to Europe and to Israel, covering, let's say, most of the technology hubs in the world. Again, a new change of, I wouldn't say a strategy, but just realizing that the first model of a pure VC and the corporate fund could coexist. In 2012, we teamed up with Publicis and created one of the leading VCs in Europe with a size of 300 million euros. Again, looking into investment in the region that I've mentioned before, and at the same time, looking for investment that will benefit to both sponsors, both Orange and Publicis. And that was actually a quite, maybe I will give some examples in the next minutes during this conversation. But basically, we realized that in terms of the value for the company, it really brings a lot of value, because sometimes the startups are afraid to have a corporate fund investing, because then sometimes we do not let the company to, let's say, to sell to other corporates, because we ask for some kind of exclusivity. Anyway, the Iris initiative is being very successful and put us in a position to add or to invest in similar initiatives, not only related to digital and mobile. So we launched another fund with Total and SNCF, the railway company in France, called Ecomobility Ventures, where we invest only
in, let's say, co-mobility related startups. And a couple of weeks ago, we also launched with other partners such as Thales, EDF, and the BPI, which is the Bank for Public Investment in France, a new fund called Revolution. So we have really several initiatives just showing that both worlds could coexist. At the same time, we're still managing our own investment from Orange. And Telmo was mentioning before, we look really into, in that case, companies already having an existing relationship with the business units.
So I think you raise a pretty interesting model that you do a lot of co-investment, not more than co-investment. You set up several funds with co-investors. So where I guess you are both limited partners to the fund, right? And you have 3 in total, you said?
4.
4. Wow. Yes. Okay. All right. So maybe then we can go a little bit more into the specifics, the sizes. I would like to with Javier. I'm not going to ask you, something that you already alluded to. So with you, I would like to start talking numbers. So I don't know if some of you actually have slides. Can you raise your hand who has slides to present? Some? 1, 2, 3. 3 of you. You 2?
I don't have slides.
Okay. All right. So while we're putting on some of the slides, I would say starting from Enel. With you, Javier, I would like to start talking about the nitty-gritty of the investment terms. And you have several initiatives, so you might want to divide the initiative or kind of investment details that maybe Wayra is doing versus your venture capital arm that I assume is very different. So what I would like to go through here next is really starting sharing really the typical terms that you guys normally use. Typically, if there is an evaluation, if it's a little bit more mature, how do you go along with this pretty tedious process, which is somehow easier, if I may say, when the companies are a little bit more mature, and is more difficult when the company is actually very early. So especially when you're running accelerator kind of a model. So I would like to go a little bit more into the nitty-gritty, which kind of equity you normally get. Do you get a board seat? Do you ask for exclusivity? And then, we start from there. Maybe we go into the critical pieces. So, Javier, maybe you can start with some of the typical terms that you guys use with Telefónica, maybe dividing between Wayra and...
Sure, that's the easiest way to do it. We have 3 different approaches. Wayra is very typical. For all the companies, we get the same stake. We get the same valuation, very early stage, so we don't do a lot of discounted cash flow analysis because there's no way you can do that. So, end of story. 15 countries, 14 accelerators, same standard terms for all of them. That way we have already gotten 350 companies invested in. Now, venture capital, different game,
Can we go a little deeper onto the accelerators also? Because here in the audience, we actually do have a few accelerators that are there looking for comparison of terms. Can you go a little deeper? What's the typical investment?
Typical investment is between 5 original equity stake and an option to get up to another 5% through a convertible. The way we capitalize that is through a mix of capitalization of the services that Telefónica offers to the accelerated companies and pure cash. And that's it. It's very simple, very easy for them to understand that they have to put their minds very quickly to business. They don't have to think a lot about the valuation terms, legal stuff.
What's the range of the cash normally that you put into the investment?
It's a standard. Given that we already have, if I talk about the numbers in Venezuelan bolivars, it changes every day. But the average is around 50,000 euros.
50,000 euros plus services.
For the first.
Okay, that's the cash part plus all the services.
Yeah. That's basically the
standard term. There is one point that I would like to raise. I don't know if we'll have time, and probably you are the one that is running for the most time, the accelerator. But you mentioned the convertible notes, which is a huge discussion. Speaking of terms and what should be done in the future, today in Silicon Valley there is not even, a condition when you invest at that stage is by default is a convertible notes because you want to invest in a month, you don't want to invest in 6 months, so that's the only way to do things fast. And it's interesting that you said you're already using this is also in Bolivia or in South America or in other countries?
In every country we're using that approach because at the end of the day what we think in Telefonica as Open Future is I don't care if it's a seed stage or if it's a late stage company with a 150 million euro valuation. For Telefonica as an option. So we are playing optionality here. We are not playing discounted cash flow for us is not an analysis tool anymore. We are making bets on a lot of different options to be able to make sure that Telefonica, and I think that's the whole point of this discussion. The whole industry has to be in whatever happens in the future. It's going to happen very fast, and we don't know where it's going to happen. So the approach is optionality. So one of the tools, the obvious tools, is instead of having just an option, is a convertible, which at the end of the day, from the legal and financial point of view, is an option.
So what's a typical time for you to decide whether or not you're going to go ahead with a company? Because that's one of the key.
That's the beauty of the option. We don't have to. We don't have to.
So you do it in a month, just to throw a number?
We can do it in a month, and we can do it in a couple of years. It depends on the market. That's the beauty of the option, that you're paying for the right to decide whenever you want to execute that option.
Exactly. And do you ask any exclusivity or any rights on the IP?
No, we don't believe in that. Basically, only for companies invested through the corporate venture capital, which is the most the other side of the venture capital approach that we have to this business. Maybe we can ask for most favored nation clauses, because we believe that this is open innovation. We really believe in this, and as Enel was mentioning this approach, we do the same. We don't believe that having an exclusivity in a country or a product for more than 2 years it will give us an advantage, a competitive advantage. It's the other way around. If we beat the company, they feel the reality that we are behind them, and that for us, this as a whole is an innovation factory, is what we're looking for. Not for something. I don't believe that there is going to be a startup in the world that will give you this competitive advantage by itself.
Let me just stop for a second. I would like to see how many startups do we have here in the room, so that, okay, in the back, don't be shy. All right, okay. Because then I would like to open a discussion. Because it's actually very interesting what you're saying, because it's kind of the perception on most of the time on the startup side is that, I'm happy to go with a large corporation, but I believe that the terms they're using are not favorable enough for me. So they put me in a box where, it would be great to maintain this discussion open. All right, so we want to talk a little bit more about the more mature like venture capital arm.
The other approach I already mentioned, we have basically, we could say, I don't want to disclose these numbers because they have not been disclosed, but more or less from our budget, only 20% goes to the corporate venture capital arm. Everything else goes to external managers or accelerators or things that are managed by third parties, basically with co-investors and being in the ecosystem. At the end of the day, again, maybe Telefonica has been doing this for so long that we believe that just the corporate venture capital approach has a very clear target, and it's not easy to identify, it's not easy to execute. So we have decided that most of the budget, most of the capital allocation that we do is to the other initiatives.
And so typically, so the fund it's been around for how long, you said?
The corporate venture capital funding in Telefonica, I don't know, maybe for almost 20 years. Since we
20 years, you said?
Telefonica Ventures has been doing acquisitions.
Okay. And that's an evergreen fund, or
it's basically like an operation. It has a yearly budget. It's not a fund by itself.
Okay. Okay. How do you measure the returns today? I mean, internally.
Pure financial. I mean, I agree with what was mentioned here. There is for us, there is not a difference between finance and a strategic approach. What we don't do is a typical trick saying that we are going to lose money because it has a strategic approach. And this is something that we don't believe. We believe that if it has a financial return, a good financial return, it has a good strategic value. So it's a mix. It's the same. Right. It's the same for us.
So your venture capital arm is in your balance sheet. It's not an external entity.
No, it's in our balance sheet. The office is in San Francisco. Typical corporate venture capital approach. Good.
All right, so let's talk about numbers here. So we have a few. We can start with Orange. So maybe if you want to run real quick in some of the highlights of these numbers. I don't know how many slides you have here, but
I think it's a general overview about some of the things that my colleagues were saying before and what I'm saying now. So I don't know. Maybe you can run quickly through the slide, and I'll just stop on the relevant ones. Okay, so we talked about our partner program. Sure. This is our FAB. Actually, maybe we didn't mention really. This is our acceleration program. So today we're presenting in five regions. So the aim of this program is really to support the startups, Again, it's more about giving them access to the business unit, so to the business side. In terms of equity, so it's really, I mean, very small amounts in convertible as well. But for us, it's really the pre-phase, I would say, to work with the startup, and then in future rounds, so then we can bring whatever investment arms we can bring into the scene, whether it's Orange directly investing, as I said, so our corporate fund, or through our external VCs. I mean, this is just a description. Okay, so these are, I mean, some examples of the investment that we've made. I don't know if this is, I can jump into this now.
Yeah, jump into,
maybe,
so the other
later.
thing that, to close it round is also to bring some examples, clear examples of the terms of the few key investments that you have done.
Yeah, absolutely. So I think that these two are on the left side are quite relevant, because one is really, it's a very good example of both strategic value and financial value. So Lookout is the mobile security worldwide leader. It's a US-based company, and we invested a couple of years ago for two reasons. First of all, because we are deploying the solution, so in several regions, several countries in Europe. So we are offering the service to our customers, and there was, of course, because of the value we're bringing to the company. So there was an opportunity to join around as a strategic investor. So really the first, I mean, criteria was really the strategic side and the synergy with the operator. And secondly, because, I mean, it's, as I said, worldwide leader, so there was an opportunity for us to join the round.
Sorry, no,
yes.
I just wanted to can you just mention the size of investment, range into those four?
Not really.
Okay.
Second one is Mopub. So Mopub is an investment. I mean, it's an amazing success story. So the investment was made a year and a half ago, and the company was acquired a year after by Twitter. And I mean, amazing deal, which is the lookout period just ended a couple of weeks ago. But here the value was more financial, so that was made through Iris Capital. And again, here the synergy was more to the other sponsor Publicis, but but we're also benefiting from of course from the financial return on that company. And the other two examples I think were mentioned before. This is more Dailymotion is an acquisition that we made, and it's part of our offering in terms of video platform. And Deezer is a minority investment that we made, and it also, I mean, we're offering the services in certain countries, not in all our countries. I think that, I mean, in terms of verticals, I mean, you have there, so I will not list them, but basically, our key priorities are quite common to the operators here. So it's cloud, is network optimization, video content, Internet of Things. Well, definitely, actually, Internet of Things is the last fund that we launched. So Revolution, the main focus is really into that specific area. And just to, I mean, without going over the slides, I think these are probably the last one. Going back to our strategy, or what are the size? So I will just jump into detailed Iris Capital. There are three funds. So one is early stage. So the main focus is investing in companies, so to support the growth of those companies. So they said early stage. And in terms of geographies, we cover Europe, but mainly France, UK, and Germany. Then there is a larger fund called Growth Europe. Again, the name indicates where we are focusing our investment, and we can invest up to $15 million. And the third fund is the global one, and that fund has the capabilities to invest all over the world. I mean, with, of course, areas of interest, but at any stage. And going back to your comment, whether we ask for board seats, not board seats, etc., that will really depend on the opportunity. So we don't have like rigid terms. Yeah.
Clara, do you want to share some of your number? You have some slides, I think, right?
I think.
Yeah, not necessary unless you need them, but
maybe it's easier for you, not for me.
Yeah. So terms in general.
Okay. Terms in general. In BBVA Ventures, we explore early and expansion. Okay. So the next one. Okay, right. That one. Here you can see what I said before, the side of our fund, $100 million. Normally tickets from $1 to $5 million per deal. But basically, we're always looking for early and expansion opportunities that can fit in our strategy agenda. So far, we can say that we have typically invested in companies with good management teams and some track record in the market. What means companies that have already passed their Series seed rounds and Series A in terms of Silicon Valley, I mean. So we can say we are more focused on Series B, B+, Series C, right? What more? Related to the scope, we don't want to close limit our geographical scope, right? But to be honest, we are more focused on our core markets, where BBVA has a leading franchise, which is normally Mexico, South America, Spain, US. But again, we don't want to close ourselves to opportunities in new markets. But we're particularly interested in opportunities with a global reach that can be scaled to several markets. We have started understanding nowadays that we also know the value of local innovations emerging from local needs, and that means that we're willing to consider also some local initiatives with strong disruptive business models that can, change the status quo of a particular market.
Can we talk about this a little bit? Because I think a core also of this initiative is to be as international as possible. So to feel comfortable in dealing with companies that are using a totally different legal entity behind, being far away, as Europe can be, investing in Estonia, in Polonia, I mean, you name it. So how are you guys organized today to deal with this kind of opportunities?
It's quite complicated because we are a small group of team, right? Basically, we're split it in two offices, one in San Francisco and the other one in Mexico, and we are trying to cover, 3 big continents. So it's quite difficult. Due to those problems, our 2 first investments were in funds because we thought that it could help us to scope, the markets. But basically, we're trying to cover South America, Europe, and a little bit the Asia. But
So if somebody from here would send you an opportunity, you would definitely look at it, even if it's a local entity. Here is an SRL.
Yeah,
it's not probably,
sorry, yeah,
you wouldn't
sure.
feel.
That's what I was trying to say before. Obviously, we are more focused on our core markets because we want to scale these opportunities to our franchise around the world. So we will like to look for these opportunities that can be set it in our core markets. But again, if we have discovered something very disruptive that can change a particular market, why not, right? It can be a slight way.
Do you have a few deals that you want to share? 2 or 3 or?
In fact, okay. We have already invested in 6 companies, 5 in Silicon Valley, and the last one was in Germany. That one probably is a good example. The SEP, which is in Germany, is a good example to show you our reasons to invest in a company. This company is in the European market of credit card payments via mobile phones. Just a quick description of the company. SEP has developed a device that connects to smartphones and allow the small merchants to accept credit card payments in a very simple and cost-effective way. That means that now these small merchants are a direct client of SEP, and the banks, who are disintermediated, we have become invisible for the merchants. And was that the first signal that make us interested in them, right? What's the value of the company? The value of the company, first of all, they are cheaper. They're cheaper than us. They get a lower percentage of every single transaction performed. Secondly, the software is given for free to the merchants, and the hardware is sold at a manufacturing cost, right? So thanks to all of that, SEP was able to reach this underserved merchant segment that we couldn't. These micro merchants that normally don't want to accept the credit card payments because of our expensive terminals, our fees, our complicated underwriting processes. So, that's the reason why we decided to invest in them. Because first of all, it was an opportunity, a clear opportunity to reach or acquire new merchants, without incurring in high cost, because we didn't have to develop not anything from the scratch, nothing new. And secondly, because it's a direct line of revenues for us, because in fact some has to partner with banks to process its payments, and then the banks will get a percentage of the transaction. And also, I would like to mention something very important that I mentioned before. Thanks to our this exchange of knowledge, right? This kind of strategic value from both sides. Thanks to these new investments, the company that already is operating in 11 European countries, now, thanks to our relationship, they're considering to expand beyond the Germany. They want to expand in Mexico, US, and Turkey, thanks to our footprint. So
that's great. The other thing that it got my attention is that you also, among the investments that you place here, there's also an accelerator. Is 500 Startups is one of the main accelerators in Silicon Valley. What was the rationale of investing in a local accelerator there? And then, if you can share, do you give any money back?
To the first one, yes. To the second one, no. It's undisclosed. Honestly, we're fine to share this kind of information. It's normally the startups who are not very well into that. But anyway, 500 Startups was our first investment in 2012. We thought that Silicon Valley ecosystem is something very different from Europe, so we wanted to play this game with the best player, and it's pretty known for all of us. It's a very pretty one. Incubator has already invested in more than 400 companies.
So it was a good, easy way to get a footprint there.
It was our first step there. Playing together with 500 Startups was a very good idea for us.
Great. I don't know if Luca, do you have some?
Yeah.
Yes. Okay. Let's run real quick on some of the numbers that you brought.
I'm not in the right position to look at the slides, but
Hold on, it's coming up. Maybe if you want to start describing first.
Thank you. I would say I would like to split and to distinguish our approach to investment in startups, and pointing out that we have, starting from this year, we are covering not only the seed portion of the ecosystem, but also the pre-seed or micro-seed one. That's because the grant we provide to startup can be, starting from this year, either converted in equity or give us the option, let's say, can be is a convertible note, which can be then converted at the end in a minority stake of the selected startup. So we have, as working capital operations, we have, let's say, we look at this very early stage phase of the startup life cycle, and we try to get a single digit stake in this startup, and this give us a fast track also to cover the startups with the corporate venture capital program. So I would say there is no, there are market standard clauses.
On the convertible notes, do you have a preset cap?
Yeah.
How much is it?
We convert. I can provide details because that's been publicly disclosed. So the average stake we get is in the region of 5%, and we use this instrument because it's been boosted from recent developments in Italian regulations, which has been introduced this instrument also for innovative startup, and so I think it's a very interesting tool to enter in the share capital of a startup, supporting them their growth. And then typical sides of investment for the seed investment program is more on the region of 100 to in the range 100 key to 500 key. For a minority stake, we are below, as general rules coming from Silicon Valley, we are below 30%. We're trying to co-invest with VC funds or private equity angels, which are a part of our network. And so I think it's this partnership, this way to cooperate, that it's a very interesting opportunity that startup ecosystem has in Italy, and not only in Italy. And I would say I don't have, let's say, a track record of investments because
the fund has just started.
We are working at several deals. I cannot provide any details because I'm under non-disclosure agreement. But I would like to also to tell you the most success story of working capital. I would say, if you move to next, please. Okay, I think this is a very interesting story, because it's also the story of a very talented guy, Cosimo Palmisano, who came to working capital in 2010 and was selecting at that time and incubated with a PowerPoint and with a brilliant idea that is to create, to bring the big data coming from social networks to help companies to boost revenues. And this simple ideas, next please. And this is a roadmap to success. It's very interesting because now it went, after being incubated by Telecom Italia, it went to US. He create with another Italian talented guy a company which is now a multinational, and in 2012 it has received the biggest round for an Italian software company in US, $5 million US dollars. 15, sorry. On April 2014, it has closed round B of financing with another additional 22 million US dollars. So, I mean,
so now it's under pressure to bring real results.
Yeah.
This is funding is just a way to, right, the exit potential.
So and everything has started with PowerPoint 4 years ago.
Great. All right. So, Alberto, maybe now you can share what was the negotiation that broke your arm with you?
Yeah, no, it's under NDA.
It's under NDA. Okay, I'm sorry. Okay. All right. So, you want to give us a couple of numbers about Enel, and then I want to spend at least 5 minutes with a startup. So, startups, please prepare a couple of controversial questions. So, you're on the spot.
Yeah, so a few words before the program, because, you know, as said, this is a new program for Enel. It's 1 year that we started with this initiative. So but we know exactly what we want. So the task assigned to this instrument, first, is that we want to detach innovation, to look at innovation as a privileged window to innovation. The second, the second is to find something that will allow us to have really a competitive advantage in the new world is coming in the power utility. So we want to have a top program. So we want to define a program in a specific field that is a top program. Because, and to have this, we put on the table what we are. So, you know, we are one of the biggest utilities in the world. We are active in 40 countries. We have more than 60 million customers. We are the world leader in renewable energy, the world leader in the distribution network management. So all these things are available for the startups that will join us. So our program is not, and I think when I present this, the financial side is the last thing I say, because it's important for us. It's not a financial program. We have put option on €1 to let the startups that are not interesting for us free without nothing.
So it turns into a grant.
Exactly. So this is the real point. If we find something, we want the best, we offer the best, but if we don't find something that will allow us to take a competitive advantage, we'll leave the startup for free.
You just write it off.
Yeah. So what we offer is a 2 years program. And this 2 years program is mainly we offer all the legal, financial, and administrative support, and also a lab, a physical lab where we have our startups. Then we offer everything, tutors, business and technological tutors, our labs, and all the testing base everywhere in the world with our networks, with our customers, everything. And then we also have managerial classes. So we offer in the first year managerial classes to the startups. And then we offer for the first year 250,000 euros, and this is as a grant. And after 1 year, we have this matching point to pass to the second year. In the second year, we offer the same things and other 400,000 euros for the 30%, less than 30% of the startup. Our mission is to bring startups at the very early stage, after 2 years, and having made the final pilot, having tested it, not in only one of our sites, but 3 or 4. Our startups today are testing our ideas in 4 or 5 cities in the world at the same time. And after this, to sit with the startups and the division that is pertaining with the ideas to find a way after the 2 years how to proceed. So we have 20 million euros for this phase and pretty unlimited funding for after the 2 years, because the best ideas has no price, and we can sit with the startups and the division and decide what we want to do in our investment model.
So that's great, and I know that is actually this is 2 years old. You started 2 years ago.
1 year ago.
1 year ago. So yeah, just one cycle of this investment.
Yes, we started last year more than a prize, because an award, because last year we had the 50 years of life of Enel, so it was something like this, and we had only limited in 2 countries, Italy and Spain, on the clean tech side. We had, and so it was a sort of test. Only 2 countries, only clean tech, more than 250 application of startups. Now we have 7 startups in our incubation now. And now we are approaching the end of the first year and deciding what startups will pass to the second. What we want to do in the future, the field still will be smart and clean tech. So all we can apply it on the smart side of utility, so smart cities and smart grid and all you can name smart and clean. But in the future, we want to focus more what our goals. At the very beginning, we said clean tech. Now we want to focus on clean tech and on smartness, what we want. And every time, every month, every 2 or 3 months, we will call something that interests us.
And to finish, let me just add, if I may, that with your new CEO today, Francesco Starace, is somebody that has been extremely open to this whole idea of startups and connecting your world with the world of startups. So I think we will see more of those activities.
My background is finance, because I also work in finance. Strategy, today I'm the lead of a group strategy of Enel, and startups, because in my background I think I I made 2 successful startups in Italy. One is Wind Telecommunication and the other is Enel Green Power. The second was made by Mr. Starace and me, so I think that I know this man very well, and sure, this is the point. He is very keen and very attentive to this word and how the innovation could, that has to be managed from the utilities, can bring us to another world that we are experimenting in these years, and we have to write, because if you don't write these changes, you will be hit for sure.
Pretty good. So thank you all for sharing. I think we have 1 second before. Yes, let's say give him a round of applause. That I think we have a couple of minutes for questions before we retreat. So I see that there is a hand up there. Can we pass the mics around? Or we have an extra mic, or I come with you. Come.
Hello, I'm Giovanni. I'm the CEO of Money Farm. I have a question for Luca, which is a honest question. I mean, it's something I need to understand because I think last year we made roughly 38 billion of revenue, roughly 3 billion of profit. I don't understand the size of your fund. I mean, is that because somebody in the organization doesn't see it as a strategic initiative? Maybe they don't understand. Maybe the middle manager doesn't understand. Why? I mean, why you're not able to reach critical mass for a fund that should be part of your future as a company?
So it's a personal question, and so I don't know details of what happened, but what can I say? I can say is that we carefully look at each business plan we receive, and we take seriously into consideration all the possible investment alternatives we find. And so I think you don't have, I mean, you are not a very early stage startup, no? And so probably was the reason why you didn't find the expected attention from my organization.
So he was talking, if I can translate there, he was saying why after all these studies, why did you were putting together a fund that to his view is too small?
Yeah, okay. I would say we have been starting this year. So we are on the radar screen, we are working at least doubling the amount we could invest. We have also exploiting the possibility to geographic expansion. And so I think, we have just started. So,
and if I might intervene here, also because you're kind of short, I know that is kind of a saying you see in T-shirts in bad parties, but size, I don't think the size matters. What matters is eventually, the plan that is behind. There are extremely successful small funds actually in doing extremely good things. So it really depends on how successful the model is. There is a model for a 200 million funds, and there is a great model for a 4 million fund. So let's get another last question there.
Thanks. Hi, my name is Simon Gifford. I'm a co-founder of Mashari. It's an online accelerator program. First, just to say, thanks to you guys. I think all the corporates here are doing a great job, and I think it's really good to sort of see you guys in the startup field. So, as a startup myself, first, thanks. Secondly, I've spent a lot of my life working with corporates in the strategy area, so I really get where you're coming from. Where you're saying you're looking for startups that sort of build on your strategy and your strategic direction, but don't you think that just looking through that lens, you could well miss those startups, those new businesses that are going to really disrupt your industry or disrupt your competitors' industry, because you're really looking at where you think you're going to, and you might be missing the stuff around that?
You're right, but you know that, I don't know if you know, because you worked on this, is to make possible that large corporation, and I thought now on power utility that are not so keen to do this because the environment was stable for years and years, and it is changing in the last year. So you have to fight because you see something, and my point of view is because I saw this in telecommunication. I'm trying to say this in the power utility, and the fact that it's difficult to make this company the first pieces in this field. So my personal view is this: yes, I'm missing something, but important for my corporation now is to move in this direction. Then things will come.
Yeah, I would like to add something for your question. So I think that basically, and again, maybe I'm talking on the behalf of my colleagues here, throughout all these different programs, whether accelerators, corporate funds, VCs, investing in other funds, etc. So I think that usually most of these, the teams see a lot of these companies, see a lot of, the deal flow. Usually they get into the table of the investment teams. The difference is whether we make the investment or not, and that will depend really on the strategic vision or what we're looking for, the size, the value. Maybe it's too risky, etc. And I have a very good example of a company which was like really disruptive, which is quite known. I think it's a company called Waze, which was acquired last summer by Google. And this is something that I believe that everybody saw the company 3 years ago. At that time, in Orange, we saw them, like the valuation of the company was definitely not $1 billion. It was like much more lower. However, we didn't really see what the company, how we could benefit from a commercial perspective of with this company. So again, and it was maybe too disruptive for an operator, but at the same time, we had the opportunity to invest at that time. We didn't do it again for the reason that I've said. So I think that it's more about the stage of the company, and whenever it comes into the investment committee, whether we will do it or will not do it. And of course, and sometimes we do mistakes, or we cannot make investment in all the outstanding companies.
Hi, my name is Francesca Iannibelli, the CEO and founder of En's company, and I have a question for the Italian company, because as a startupper, we have to face the fact that Italian bureaucracy is forcing all the startups to move to another country, because here they're missing some financial tools that can help us to grow after the first help that some program can help us to grow. So I want to know, how do you plan to act against the Italian bureaucracy to help the startup to grow globally from after this kind of program? For example, the convertible note here for a simple SRL company is something that we cannot do, and the moving to another kind of company is something that cannot, more bureaucracy and more expensive for a startup. So what do you plan to do?
Take that. How do you plan to act against bureaucracy?
So first of all, I would like to point out that starting from the famous decree Crescita B, so growth to 2.0, the convertible note have been introduced in our regulation for innovative startup like SRL Innovative. So this is a very important, fact that of this new approach to startups in Italy. Having said that, I do agree with you. There are a lot of stuff to do, and we are trying to we work closely with our startups in order also to provide the appropriate mentorship to solve this kind of problem, because we know that I mean it's not easy. Bureaucracy is terrible, but we don't want to leave our startups alone facing with this problem. I mean, because it's a problem. So having said that, we have we work in a very cooperative way with our startups, and so I think probably there are a lot of stuff to do, but it's the right moment, and I think there are some positive signs, considering also the economic crisis, which is also affecting our P&L, and so as company. So I think it's the right moment. We are supporting. We are we do agree with you. Bureaucracy is terrible, but I think something has changed, and probably will be better in future. The near future.
Would have great to have is Firpo here still? Stefano? No, so from the Italian government. Yes, but you already said that you're accepting convertible notes, so you shouldn't complain. Do you have some more to add?
And not to add, because we are active in advising all the people acting in the government acting on these themes, so with our experience. So this is for sure, and we know the problems that we start from. But also with us, we think that when we in the program we offer, we are trying to solve all these things in the program. So we know that our startups, the startups we choose, have not this kind of problem, because we act in solving all the bureaucracy, financing, legal, fiscal, and administrative issues that the startups could have in this 2 years program. So we want the startups focus on it, and we put all our structure and functions to do this. So I understand there is a limited number of startups, and we have to solve problems to unlock innovation in a country level. And also one point, so we have a worldwide program, but the location of the lab is in Italy, it's Rome. So I hope in the future to see some Palo Alto companies moving to Italy to join this program. So.
There we go, and that's a happy ending. Let me just add one small little thing there, because I think is a crucial conclusion. So today, I mean, the world of investing is more and more transparent, and there is very little local investment that makes sense. The greatest opportunities, and that's why we're all here, is to do something as transnational as possible. And that's where the opportunity lies. And if we are stuck into the bureaucracy or into the lack of knowledge of the standard terms, we're missing out. And so I think the whole challenge that we have ahead, but also opportunity, is to be able to live in the worlds where the terms are standard. The terms are already standard, already defined. You can find it online. They're open source these days, at least some of them, right, at the early stage. So we should all be aware of that. That's the status of the market. And Silicon Valley can be an option, but not necessarily, the promised land for everybody. But what works there, though, is that there is an economy that has been proven to be creating success stories. So I think it's an opportunity also to cross-pollinate and learn, at least from the terms. And I'm going to end up with a shameless plug, but that's also what we do with Mind the Bridge. We also run a class, if you will, with investors, really to share the terms and go into the technicalities of what we see working and what not in Silicon Valley. All right. Okay, so with that, a lot of people here behind. I want to give a hand to our friends. Again, remind that they are the hero of these bridges between startups and corporations. So thanks again to share your thoughts and for what you're doing. And I'll give the word to Isidro for some final conclusion.
Thank you, Marco. Well, we have concluded the part of the sharing best practices and ideas between corporates. We have missed some academia here to share also their experiences. But this is one of the elements of the Startup Europe Partnership. The other thing is the thing that you have not seen, that is the scouting part that Factory and Nesta and Mind the Bridge have done. And this afternoon will be the matching part. So from the sharing part, I have to say that I am very, very happily surprised about the level of the information that has been disclosed here today. And I think we need to do something to ensure this information reaches the startups. Because when I talk with the startups, when I talk to Mike Butcher, to all these kind of opinion leaders, they say they don't know about this. They don't know. I mean, you, Simon, you are one of the leaders in this community as well. I'm not sure you didn't know many of the things here. So we have to make, I think this is a task for the factory and for Mind the Bridge. You have to encapsulate this information in a way that is consumed by the startups. I don't know how, the small pills, mobilizing the tech media blogs. I mean, we can create connections with most of them, Simon as well, of course, and Marco. So we have to ensure that this information is disclosed. My second conclusion was triggered by this Italian co-CEO, co-founder, the last question about the convertible bonds or something like that. And the response here was that it's already in the regulation. So here it demonstrates that there is a gap as well, not only between corporates and startups, but also between public administration and regulators, that we believe we are doing our best to help the startups. We had the best. I mean, the Italian civil servants, they talked to me like 2 months ago. I said, we need to do something because we had the best regulation in Europe. We know that everybody in Europe knows about that. Then, like 1 week later, I was in Confindustria in Brussels, like 20 startups from Italy. They had no clue about this fantastic regulation. And now here again, another Italian entrepreneur didn't know about something that is already in the regulation. So here is a message for the public administrations as well, that we have to make an effort to build bridges with the startups. And with this, well, this is the first time we try this format. I think I'm quite happy. For most likely, we might need to fine-tune something, but certainly I think this is the way forward. So good luck to all the ones who are in the Startup Europe Partnership. I hope the ones who are not yet, but who were in these chairs like Enel, Deutsche Telekom, they also join in the near future. And others I know that you are working on. So good luck, and let's hope in 1 year from now, when we do the metrics, we can prove that this was the right format to help startups to scale up. Thank you very much.